Well, it's time to move on now and put the spotlight on our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each of the sectors. Today, we have Abhishek joining in to tell us how the third quarter could be for the NBFC sector. Over to Abhishek.
Well, for NBFCs in Q3FY25, the outlook reflects a cautious and mixed scenario. Now, here's a breakdown of the key points to watch out for. There will be moderation in loan growth. The moderation in business momentum had been observed in H1FY25, which is expected to continue into Q3 as well, with loan growth likely moderating further. Now, this suggests that NBFCs may face a slower pace of loan origination during the period as well, that is disbursals. Sectoral impact, if you take a look, housing finance companies may see some challenges in loan disbursements in regions like Bengaluru and Hyderabad. Now, possibly this is due to regional economic or market conditions over there. This could impact the overall loan growth as well. So, gold financiers over there, the gold lenders are expected to experience a strong growth in Q3 FY25, which is from the fact that they are benefiting from the continued high demand for gold-backed loans, especially amidst the potential macroeconomic impact that you are seeing. A mixed asset quality outlook. The commentary on asset quality will remain mixed from most of the lenders. While many NBFCs are likely to report flat trends in asset quality, any signs of stabilization in slippages or asset quality for sectors like microfinance institutions and personal loans could be seen as a positive read-through, although it might be premature to declare that stress has peaked for these segments. Now, net interest margin is expected to remain stable for most of the NBFCs, although there could be a cautious outlook due to yield pressure going ahead. Now, some NBFCs may see downgrades in net interest margin expectation from analysts if there is sustained pressure on their yields. Asset quality, half empty, half full. So, asset quality situation is expected to be a balancing act with some optimism regarding potential stabilization, but also cautious around the persistence of stress in certain loan segments. Watch out for the stress in unsecured segment, especially the microfinance sector. Some key estimates that we have from Kotak Securities, Bajaj Finance on a year-on-year, they expect NII to be up about 22% YOY and PAT to be up about 18% YOY. For Bajaj Housing Finance on a year-on-year basis, NII is expected to be up 24% YOY, while PAT is expected to be up 31% YOY. For Chola Mandalam, NII is expected to grow by 33% YOY, while PAT is expected to grow at 22% YOY. For Muthoot Finance, the NII is expected to be up 36% YOY, while PAT is expected to be up 26% YOY. Spandana Spurti, one of the MFI player, Motilal Oswal estimates NII to decline by 9.2% YOY, while they can report a loss of 456.7 crore versus PAT of 127.4 crore in the same quarter last year. Back to you.
All right, thank you very much for that, Abhishek. Let's discuss this a little bit more and what to expect for the NBFC space. Digant Haria is founder of GreenEdge Wealth Svcs. He's joining us now to help us do that. Digant, great to have you with us here on the program. Thank you for your time. You heard Abhishek brilliantly summarizing what to expect. But what is top of mind for you when you analyze numbers as they start to come in for NBFCs?
Yeah, morning everyone. Good to be here. See, I think the BFSI sector, in general slowed down. We saw that deposit growth, loan growth, everything coming in single digits, something like 9.8% or, sub 10%. So I think that itself will be reflected for most of the NBFCs and banks that, growth in general slows down for everyone. Margins in general remain in pressure for everyone. It is just the asset quality which is going to probably differentiate a little bit, and then Abhishek summarized a lot of it, but I'll just give you the pecking order that microfinance companies and banks which are heavy on microfinance, that will be the worst impacted pocket, not just on asset quality but on growth, the income line item, everything. So I think that is where we'll see the biggest pain. Second, we could actually see the commercial vehicle finance companies, the likes of Shriram, Chola, Mahindra Finance, Sundaram, they were growing well, no asset quality issues. I think the momentum there will take a blip because, the good CV cycle is probably at its peak and, now on the downward trajectory. And as far as the consumer facing NBFCs are concerned, I think, the growth is slow. There is no respite on asset quality pain. That slowdown is everywhere. So I think it's going to be a soft quarter everywhere. The only bright spot that we see, one is the gold loan segment. There Muthoot Finance can do very well. Manappuram, it will do well on gold, but it has a lot of cleanup to be done on the microfinance space. IIFL could probably do well because it just got the RBI approval, but then they have a lot to catch up and so on. And there's this agri finance. I think two-wheeler / agri finance is also one bright spot. We had a great festive season. So somebody like L&T Finance, maybe they can offset their microfinance losses in terms of, good performance from the other businesses. So yeah, these are, maybe Muthoot, L&T Finance, one or two stocks, probably could give a positive surprise. But otherwise, the outlook does not, not a very encouraging or not a lot of surprises this quarter. This quarter we have to bear, the brunt of macros.
Okay, got it. So that's putting it very, very clearly. So barring from the gold financiers or maybe companies that have a, more of their portfolio geared towards agri financing, rural financing, it might not be that great. Digant, to come back to this point on, unsecured lenders and consumer financing, you mentioned that we may even see some more asset quality pain. I mean, so my question is, so the RBI slammed the brakes, right? So we know the growth has come off, but you're saying that despite that, despite the guardrails, there could be more deterioration in asset quality. If you could expand on that, which companies, which segments?
Yeah, so see, the microfinance comes now, right on the top. See, the party lasted for 2 years. We cannot expect the hangover to just go away in 2 quarters, right? It will take a good 1 year for this entire cleanup. See, when we say, the sector has to clean up, first is they have to stop growing. It's just 1 quarter that they have not grown. Second is they have to improve their business practices in terms of, not giving borrowers more loans than they need. That is something which is still work in progress. And third is obviously you have to clean up whatever loans have gone bad. So I think they have acknowledged the problem. They have started the steps, but we have to go through this 2 quarters of pain. And we only talk about asset quality. But see, when you have to write off loans, you need income to write off those bad loans, right? Now the income line item itself will be under pressure. So I think that the microfinance pain will continue for longer than what we have seen in the past cycles because the income line item itself is hit.
Sure.
Even unsecured, yeah. Sorry.
Yeah, no, Digant, that's the point on MFI. That's well taken. And I think now the market's kind of wrapped its head around it as well, that this is not ending in the 4th quarter or the 1st quarter. This is going to continue. My question was more for the urban consumer finance companies. I mean, something like a Bajaj Finance. Bajaj's quarterly update still showed good growth. I mean, I still remember 29% AUM growth. But what about the others? Growth, and the bigger question is on asset quality. Which are the lenders or NBFCs where asset quality pain will show up? Consumer lenders.
Yeah, so I think, someone like, say, a Poonawalla Finance or an Aditya Birla Capital, who relied a lot on their fintech partners to get them personal loans. Okay, so they do these co-lending, co-origination or BC partnerships. So I think that is where you can see some leg of pain because, see, in personal loans also, I would bifurcate, CIBIL score more than 700, which are the good customers, and CIBIL score less than 700. So this less than 700 is where there is quite a bit of pain. Those pain will not show up for, say an ICICI Bank or an HDFC, but a little bit of it will definitely show up for Bajaj Finance. And a lot of it can show up for, say, an IDFC Bank or, Poonawalla or an Aditya Birla Finance, all the new companies who ventured big into personal loans. So that is where I would be a little more watchful on the unsecured part.
If there's one NBFC stock that you are to buy in this gloom, because they say you have to buy good businesses when the narratives are wrong and when the numbers are wrong, right? Which one would that stock be, if any?
So, Survi, I'll give 2. One would be Muthoot Finance, that is performing well and probably will perform well. One could be L&T Finance, where I think we could be very close to hitting the bottom this quarter. So apart from this 2, in that long list, there's only maybe an REC or a PFC, but those are infra finance, those are not really retail finance. These are pockets where I think asset quality may not be a big issue and we could be very close to the bottom. So yeah, that's about it.
Got it. All right, interesting call. So L&T Finance and Muthoot would be your picks. Got it, Digant. Thank you very much. Great conversation as always. We look forward to more in the coming weeks. Time for a